without further ado, if you guys could take it away.
Good afternoon, Mark. Thank you so very much. I'm Nadine Boone, the Assistant District Director for Business Development here at the United States Small Business Administration. And I am going to join here with Dan Martiniello, who is going to talk with you about the Restaurant Revitalization Fund, which is going to help restaurants and other eligible businesses to keep their doors open. The program will provide restaurants with funding equal to their pandemic-related revenue loss up to $10 million and no more than $5 million per physical location. Recipients are not going to be required to repay the funding as long as the funds are used for the eligible purposes no later than March 11th, 2023. Dan Martiniello, our lender relations specialist, part of our lending team of the SBA's Massachusetts District Office, is going to provide information regarding eligibility and application guidance for the Restaurant Revitalization Program. That's going to go along with the Q&A question and answer session at the end of the presentation. Dan, take it away.
All right, thanks Nadine, and thanks everybody for taking the time out of their day to join us. I want to thank the U.S. Haitian Chamber of Commerce for inviting us on today's session. We have a lot of information to go over this new COVID small business relief program that the SBA is running, the Restaurant Revitalization Program. So you're going to learn a lot today. It's great timing because the application portal to apply opens up on Monday at noon. So let's get right into it. I'm going to start sharing my screen. Just bear with me 1 second. Just want to make sure I got the presentation up and everybody can see it. Can everybody see it on their end? Mark, are you good? You can see it? All right, perfect. Cool. All right. So, like I said, my name's Dan Martiniello. I work on the lender relations team here at the Massachusetts District Office for the SBA. We're going to go over, everything you need to know about this new Restaurant Revitalization Program. I'm just going to minimize the screens here. Okay, so what is the Restaurant Revitalization Program? So I know Nadine, briefly went over it. So basically, this is a new program under the American Rescue Plan Act, which became law on March 11th of 2021. Right now, there's appropriations of about $28.6 billion for this program. So when you look at the overall, this is a nationwide program. So in the grand scheme of things, this isn't a lot of funding compared to, say, like the Paycheck Protection Program. So keep that in mind. But, with all that said, I know there's a lot of talk of, having to rush to submit your application, and you definitely want to submit your application as soon as possible. But, just going back within the last year and how Congress has reevaluated things every few months. And if this program is successful, you never know. Congress may look at this as, something that can benefit these business entities who are eligible in the future. And if more funds are needed, that's always a possibility down the line. So, I just want to stress the fact that yes, you want to apply right away, but understand that Congress does evaluate these things in the future, and if need be, there might be opportunities for more funding. So again, the appropriations are going to remain available until they're expended, and then funds must be used no later than March 11th, 2023. So this is a big issue, well, not issue, but a good service for small business entities that get funding through this program, because I'm sure some of you have applied for the PPP, whether you got a first or second draw, and you had a limited amount of time to utilize those funds and then ask for forgiveness. You're going to have a much longer extension on the use of funds under this program. As you can see, it's over just about 2 years, and you can actually go back for past due expenses that we'll talk about here on this webinar. So who is eligible? So eligible entities are businesses that are not permanently closed and include businesses where the public or patrons assemble for the primary purpose of being served food or drink. Okay, so that's the primary purpose of this particular funding program. So this is going to include restaurants, food stands, food trucks, food carts, caterers, bars, salons, lounges, taverns, snack, non-alcoholic beverage bars, bakeries, brew pubs, tasting rooms, tap rooms, a laundry list of other entities, as you can see here. But you just want to keep in mind a couple of the below entities, such as bakeries and when you're looking at wineries and distilleries, you need to show that on-site sales to the public comprise at least 33% of gross receipts. So this program is not for an entity who is considered just strictly a wholesaler. Okay, so they need to have, at least a third of their gross receipts coming from, public, consumption on site. And then who is ineligible? So entities are going to be ineligible, if they follow this list here. So if you have a state or local government operated business as of March 13th, 2020, if you own or operate together with any affiliated business, more than 20 locations, regardless of whether those locations do business under the same or different names or are in different industries. Okay, so they're trying to make sure that they're targeting the smallest of the small businesses within these given types of industries and business entities. If you have a pending application for or received a shuttered venue operator grant, that's one thing you're going to have to assess as a small business. You may be a small business that could technically be eligible to apply for both of those programs. So the shuttered venue operator grant, the portal finally opened after working out some of its, portal issues this past Monday. So if you are applying for that or you have a pending application, you can apply for the Restaurant Revitalization Fund. Also, if you're a business that's publicly traded, if you're permanently closed, if you're a nonprofit organization, also too, the bottom limit on as far as funding goes is $1,000. So if your funding based on calculation is less than $1,000, that it's going to make you ineligible for this funding program. So how much are you eligible for? So the SBA may provide funding up to $5 million per location. So it's not going to exceed $10 million total from the applicant or any affiliated businesses. And again, the minimum award would be $1,000. So, with that said, there's going to be a few calculations that you can utilize depending on your situation. We'll go over those in the next few slides. But when it comes to funding, this is not going to be like a negotiation. Maybe if you're familiar with the economic injury disaster loan, sometimes you can negotiate the amount or request a lower amount or, ask for an increase based on whatever calculation you end up needing to use. The SBA will verify that calculation was correct. And if appropriations are still available, they will provide you those exact funds. They're not gonna, ask you, say, if your calculation said you could get $100,000, they're not gonna come back and say, well, let's give you $50,000. Or you're not gonna be able to say, hey, can I get $150,000? So, there's not gonna be any negotiations when it comes to this particular program. So how is this program different from other SBA programs? So applicants do not need to register in SAM.gov, and SBA will not require a DUNS or a CAGE identifier. So if you have been looking into the Shuttered Venue Operator Grant Program, you've probably noticed that you've had to register in SAM.gov. You've had to get a DUNS number or a CAGE identifier. None of that is required for this particular program. So, those extra steps needed for the SVOG, as we like to call, we start using acronyms for everything nowadays because, we're getting so many programs going on. There's not these added initial steps just to apply. So also too, if you have a valid unexpired ITIN, those are acceptable for this particular program. So keep in mind, ITINs usually expire after 3 years, and then if you don't use that ITIN to like file taxes, for instance, that will also cause your ITIN to expire. So you want to check on irs.gov and figure out the process if you think your ITIN may have expired, if that falls, into your situation, as they can provide you information on the next steps of what you need to do to clear that up. So as far as forms of organizations and who's eligible, as you're going to see, the majority of different forms of organizations are eligible, when it comes to your for-profit entities. So C Corps, S Corps, partnerships, limited liability companies, sole proprietors, self-employed individuals, independent contractors, tribal businesses, LLCs taxed as an S Corp or sole proprietor as well. So, there's really not, when you're a for-profit business, there's not really a business entity that's not eligible for this program. So franchises, if this is a concern to you, if you own a local franchise, maybe a Subway, maybe a Domino's, whatever the case may be. So, you could be eligible for this program as well. So any business concern operating as a franchise and meeting all the other program requirements is eligible. The franchise must be listed on the SBA franchise directory. We have thousands of franchises listed on the directory. So, we don't foresee any sort of issue with you being able to look that up and your franchise not being listed on there. In the application portal, applicants will be able to look up that entity within the directory. For brands not listed on the directory, including brands that have previously been denied listing on the directory because of affiliation issues, the franchisor must submit the franchise disclosure document and all other documents a franchise is required to sign. So, if that falls on, within your purview, you want to connect with your franchisor and have them, reach out to the SBA if they're not listed on the franchise directory. So as far as eligibility goes with bankruptcy, applicants that are operating under an approved plan of reorganization under either a Chapter 11, Chapter 12, or Chapter 13 bankruptcy and meet all program requirements are eligible for funding. So an applicant is not eligible if it has permanently closed. So meaning, you shuttered your doors, you weren't temporarily closed due to, maybe like a health or a safety, issue. You just ceased operations. You filed a Chapter 7 liquidation bankruptcy or filed either a Chapter 7, 11, 12, or 13 bankruptcy, but is not under a approved plan of reorganization. So permanently closed does not include businesses who temporarily closed their doors due to state or local restrictions or other pandemic causes that are still, in operation or have reopened. Also, this includes, if maybe you closed for a month or two because you had a remodel, your restaurant or your facility, whatever the case may be, that doesn't, you're not considered permanently closed there. Also, if you're a seasonal based business, maybe you only operate during the summertime. I know if anybody here maybe has a, restaurant down Cape Cod, that may be the case. That's you're not considered permanently closed. That's just your normal operating cycle. So it permanently closes. You're not taking customers any time of the year. You're completely done out of the business. So how do other SBA relief programs impact the RRF? So for the Paycheck Protection Program loans, any funds already received through the Paycheck Protection Program will be subtracted from the applicant's final funding amount. Applicant is verified using their EIN, ITIN, or social security number associated with its PPP loans. If the applicant received a PPP loan, the applicant must use the same EIN number for its RRF application as it is used in its PPP application. So keep in mind that is, big. You want to make sure that, the SBA within their system from what I know, during the application, once you put in your EIN or your SSN, however you're applying based on your form of organization, the SBA is going to track to see what PPP loans you have on file. So from what I know right now, it's actually going to upload that information as you're submitting your application. So it will pick up on the EIN you entered and submit that corresponding PPP info that's embedded internally in our systems. So if the applicant applied for a first draw PPP loan from multiple locations under one EIN and subsequently applied for a second draw PPP loan under different EINs, the applicant must provide the EINs for each entity that received second draw PPP loans. Upon applying for the RF, an applicant must withdraw any outstanding PPP application. So that's important. If you're currently applying for a PPP loan, you're going to have to make the decision. If you haven't received an approval yet on that, you're going to have to make that decision pretty quickly, whether you want to stick with that PPP loan or you're going to have to withdraw it, ask your lender to withdraw that application. Because what happens is when you're doing your calculation and you're submitting your application for the RRF program, each calculation, as you'll see, factors in, minuses out the PPP funding that you have. But if you don't have a finalized approved PPP loan because it was still in process for one reason or another, you basically could be allotted more than you really should be. So you gotta, you're attesting to the fact that you've either withdrawn or you don't have an open application for a PPP application when you are going through this application process. So just, make sure as well that this also goes for the shuttered venue operator grant. You're gonna have to choose between one or the other. You cannot apply for both programs at the same time. So some other information that you'll need to attest to, which will be on the application itself. So all applicants must certify that their current economic uncertainty makes the funding request necessary to support ongoing or anticipated operations. So what are the eligible use of funds? So as you can see here, it's broken down into a few categories. You have business expenses, construction expenses, business debt. So with that said, you're going to see that a variety of expenses can be utilized with the funds from this program. Very similar to the Paycheck Protection Program, where you can utilize these funds for payroll costs. Same thing here. You can utilize them for payroll costs, utility payments, maintenance expenses, business supplies. This includes, the PPE equipment, for your staff or other cleaning materials. Business food and beverage expenses, covered supplies, business operating expenses. So this includes, any of your normal day-to-day operating expenses for, maybe your insurance costs, your marketing, other licensing fees and legal fees, your point of sale equipment. There's a variety of, your day-to-day operations that you can utilize these funds for. Also, construction of outdoor seating. I know a lot of folks have had to expand their locations because of, again, the health and safety restrictions. So, you can utilize the funds for that as well. You just want to make sure that this program is not intended to help you expand your business. So, if you want to open up a second location and utilize these funds to outfit that second location, that is not the intention of this program. The intention of this program is to pay for expenses had the pandemic not happened. Okay, so pay for your day-to-day, normal business operating, expenses. A couple other examples that may fall under, say, like a construction expense or a business expense would be, if you're a restaurant and your oven has a lot of wear and tear and it needs to be replaced. It was broken, things like that. You can replace that. Your air filtration system, maybe that broke and you need that replaced. Those are normal everyday operating, business expenses that are going to occur, due to things, just with the normal wear and tear and lifespan on equipment. Also, too, business debt. Payments on any business mortgage obligation, so both principal and interest. You just want to make sure that, again, This is not going to be used for any sort of prepayment of principal or interest. And then business debt service, so both principal and interest. Again, no prepayments on principal or interest. Okay, so you can pay, like if you have an economic injury disaster law for, maybe you took that out. You can pay the monthly installment payments. You can't just use the funds though to pay the entire loan off. Or maybe you have a small business loan with a lender, same thing. You can't utilize the funds to pay the entire loan off, but you can utilize the funds to pay the monthly, the normal monthly payment. So when do you have to utilize the funds? So like I said, you do have a much longer cover period compared to, say, the Paycheck Protection Program, if you're familiar with that. So you have up until March 11th, 2023 to utilize the funds. However, you can actually utilize the funds for expenses occurred in the past. So up until February 15th of 2020. So maybe you have back rent that you maybe had a deal with your landlord for your location to defer rent. So until a given time, you can pay that back rent. Or other eligible expenses. Maybe you were late on some other utility expenses, and you have some sort of agreement to pay those at a later date. You can utilize the funds for expenses occurred all the way back, going back to February 15th, 2020. If the business permanently closes after receiving funds, the covered period will end when the business permanently closes or on March 11th, 2023, whichever occurs sooner. So, unfortunately, in the real world, those things are gonna happen. So, if worst case scenario happens and your business permanently closes, you're going to need to send back any funds that you did not use already to the government. The SBA right now is actually working on that process for folks that couldn't use all the funds within that covered period time frame. They're going to have a process for them to electronically send those funds back to the government. So some more information as far as when you have to utilize the funds. So when it comes to utilization of the funds and the integrity of the program and making sure that everybody that received funds is using the funds for the correct purposes, there is going to be a use of funds assessment, typically on a yearly basis. So after the total awarded funds have been exhausted, entities must provide a detailed expenditure report and certification for the required period. Until applicant completes the use of funds assessment, beginning December 2021, applicants are required to provide self-reported, unaudited data detailing the use of distributed funds each year through 2023. So SBA will provide additional guidance that outlines the details on reporting requirements and procedures within the next few weeks. So just keep in mind, once you receive these funds, just keep record, just like you would for any other thing, expense going on with your day-to-day operations for your business. Keep record of how you're spending these particular funds. Okay, so next we're going to go into the calculation. So, and this is going to break down how much funding you could that you'll be able to be eligible for, considering that there are appropriations available at the time your application was approved. Okay, so most of these calculations, as you see, are going to be based on when you started your operation. Okay, so you have calculation 1 here. So these are for applicants in operation prior to or on January 1st of 2019. So what you're going to do is you're going to take your 2019 gross receipts. You're going to minus out your 2020 gross receipts, and you're minus out your PPP loan amounts, and that is what your fund amount will be. Okay, so pretty simple. Not too many things you really got to do there. Question that's been coming up often on some of these other presentations we've been doing. What if my 2020 gross receipts are higher than my 2019? Will I be eligible? The answer is no. I mean, this program is for entities that have continued to be hard hit throughout this entire COVID process. So, they're trying to help the folks that didn't do as well in 2020 during the pandemic. Okay, so another thing too that we'll go over, but where you can also find more detail as far as what you need to enter as far as gross receipts and what's not included in gross receipts. The SBA actually has a program guide. So the Restaurant Revitalization Fund has its own landing page on SBA.gov under our COVID relief options. Within that section, we have frequently asked questions section that's being updated pretty much hourly with frequently asked questions. So they've been really on top of their game on that. We also have a pretty thorough program guide, but it's not thorough to the point where it's 200 pages long and you got to go searching for everything. It's only about 20 pages long, and it provides you definitions for, say, on-site sales, for gross receipts, and it details, depending on your business entity, what line item you should be looking at for your gross receipts. So I'll make sure at the end of this presentation that we provide that to the chamber. We'll provide the links to, all the important links for this program to the chamber so they can disperse that out to all you folks. So continuing on the calculation. So the second calculation, this is going to be for applicants that began operations partially through 2019. So maybe you didn't start your operation until August of 2019 or October of 2019, whatever the case may be. And what we consider for this program of when you as a business started your operation, just so no one's confused about that. It's not when you say applied through the Secretary of State, or got your EIN number. What we consider as far as the start of your operation is when you got your first sale from a customer. So that is when you started your operation, because you could have gotten your licensings and your EINs and things like that months before you actually started getting sales from customers. Okay, so what you're going to do here is you're going to take your average 2019 monthly gross receipts, then you're going to times it by 12, and then you're going to minus out your 2020 gross receipts, just like you did in the previous calculation, and then also minus out your Paycheck Protection loan amounts. Okay, so when it comes to the Paycheck Protection loan amounts, regardless if you've received forgiveness on them, or you got partial forgiveness, or you haven't even applied for forgiveness on your PPP loan amounts, you have to deduct those amounts because that program is considered a grant program, and the intention is for everybody to get fully forgiven as long as they utilize the funds correctly. But regardless of what stage you are in forgiveness for PPP, you have to minus out your PPP loan amounts if that applies to your situation. Okay, so just as an example, let's say you started October 1st of 2019, right? So the end of the year, you had about 3 months worth of sales. Your gross receipts showed of $30,000. What you're gonna do is you were in operation for 3 full months. You're gonna first take that $30,000, divide it by 3. Then what you're gonna do, that gives you $10,000 for your average, right? And then you're gonna times that by 12. That's where it's going to provide you your yearly 2019 figure, okay? And that's where you'll, in turn, minus out 2020 gross receipts, minus out your PPP loan amount. Also, too, they want you to prorate based on the time of the month you did start. So let's say you didn't start at the beginning of October 2019. Maybe you started the middle of October, October 15th. So in that case, instead of dividing your gross receipts by 3 full months, you're going to divide it by 2.5 months. Okay, so they want you to actually prorate that monthly figure based on when you actually started selling to customers. Keep in mind, if you fall within this category, as you'll see on the next slide, you have the potential to also utilize calculation 3. However, as you'll learn very soon, that there may be a requirement for longer processing times if you decide to utilize calculation 3 versus calculation 2. So calculation 3, applicants that began operations on or between January 1st of 2020 and March 10th, 2021, and the applicants not yet opened, but have incurred eligible expenses as of March 11th, 2021. So that is who can utilize calculation number 3. Now, I want to pause for a second on there, because that's important. Some of the programs that we have, out here, particular PPP, you've had to have been in operation and had payroll going either on or before February 15th, 2020. As you can see here, you could technically be an applicant that hasn't even opened yet. That's a good thing. It can open up for some assistance for a variety of small businesses who may have started trying to open up a business, maybe right before the pandemic hit, or they've been trying to get things going during the pandemic, and things in the state, they keep getting delayed, and it's causing a lot of issues, but they've incurred a lot of expenses in the meantime. So this opens the door potentially for a lot of folks to apply for some funding. So what you're going to do here is you're going to take the total amount spent on eligible expenses between February 15th of 2020 and March 11th, 2021. And then if it's applicable, you're going to minus out 2020 and 2021 gross receipts. And again, if it's applicable, you're going to minus out PPP loan amounts. And I say if it's applicable because if you didn't get any gross receipts in one of those years, or you didn't receive a PPP loan amount because you weren't eligible, you don't obviously minus that out. But with that said, you might be asking, well, Dan, what's an eligible expense? So those expenses that I went over a few slides before, as far as eligible expenses for the use of funds for this program, those are considered the same eligible expenses for this calculation. So if you've already incurred those types of expenses, maybe you incurred payroll, maybe you've incurred, some business debt for small business loans, things like that, you can add that within this calculation to figure out your funding amount. This is why it will take a longer time for the SBA to review this and approve it, because they have to look at the supporting documentation that you're going to need to supply to them and verify that each eligible expense that you add to your calculation is an actual eligible expense. Okay, so that's the reasoning for the longer processing time. So what can I exclude from your 2020 gross receipts? So here's a list of things you want to exclude when it comes to your 2020 gross receipts. So anything you receive from the Paycheck Protection Program, whether it's a first draw or second draw, doesn't matter when you received it. If you received it in 2020 or 2021, don't include that in your 2020 gross receipts, because you're already minusing that out within your given calculation. And then any sort of SBA Section 1112 payments. So Dan, you may say, well, what the heck is that? And if you have dealt with a lender in the past and you have a small business loan, it may be an SBA loan. Maybe it's what's called like a 7A or 7A Express loan. You may have been aware that the SBA has been picking up on principal and interest payments for a given period of time over the last year. So those payments that the SBA has been picking up on your behalf, those you do not include in your 2020 gross receipts. Also, if you received SBA Economic Injury Disaster Loan, if you received the EIDL Advance or the Targeted EIDL Advance or any other grant funds that were received under the CARES Act, you do not want to include that. Some other things you don't want to include. So any state or local grant, business grants. So depending on the city or town you're in, they might have offered, some funding, some grant funding during the COVID period, or, with the state, I know they were working heavily with Mass Growth Capital, to provide, grant funding as well. So those types of funding, if you did receive it, do not include it in your 2020 gross receipts. And then last here is the Randolph-Shepard Act financial relief and restoration payments appropriation, do not include that in your gross receipts as well. So next, we're going to go on how do you apply. So there's going to be a couple of methods. The first two methods you see here will be your fastest way to apply. So the first way to apply would be directly through SBA's platform at restaurant.sba.gov. Okay, so they're gonna, like I said, the application portal will be opening up on Monday at noon. So be prepared and get yourself ready, because right now, if you plan on going directly through the SBA's platform, you can register, for a username and things like that. You can actually do that now. You could have done that as of 9 o'clock this morning. At the end of the presentation, just because when I'm doing this presentation, my whole screen gets taken up, I'll provide you, a list of some different, internet features that you want to make sure, like what's supported and what's not supported. So just in case, when you are trying to apply, if you run into some errors, because I think like Internet Explorer is not supported, and like Chrome and Microsoft Edge are. So you want to just make sure that you have those platforms on your laptop or however you're applying online. Also through point of sale vendors. So the SBA is working with a few point of sale vendors. So I know Toast and Square are definite. If you are a Toast or Square customer, you can apply for this RRF fund directly through them. So they'll have their own application portal. You do not need to register with the SBA on the SBA's platform if you decide to utilize your point of sale vendor. But right now, only 2 of them are actually accepting applications, through their own point of sale vendor site. However, other point of sale vendors are assisting their customers with supplying them with whatever necessary documentation that may be needed, if they're applying through the SBA's platform. So I know, I think it's Clover and NCR and a few others. I can, make sure everybody, gets the links of who it is that's supplying that information. If you are a client of theirs, you want to get in touch with them. And then the third option would be through the telephone. So the SBA set up a hotline for this program. It's 844-279-8898. And like I said, you don't need to write all this stuff down, because I'll make sure we send this presentation out to the chamber so they can disperse it to everybody. So with that said, when it comes to the hotline, this is a general hotline that's utilized for a variety of things for this program. So if folks just want to, ask questions about eligibility concerns or whatever the case may be, maybe they have technical issues, things like that. So just keep in mind, you're probably looking at longer processing times if you decide to have someone help you apply over the phone. So what documents do I need in order to apply? So this is a good question. This is a general rundown, and then the next few slides will break it down based on the calculation you're utilizing. So everybody, doesn't matter what calculation you're utilizing, is going to need to fill out an application. So it's going to be SBA Form 3172. This is going to need to be completed, initialed, and signed. So completion of this form digitally on the SBA grant platform that will open up on Monday will satisfy this requirement. So there's no need to print out a paper application. However, we do have a sample application on the RRF landing page on SBA's website. So if you want to look at that, again, I'll send that link out to everybody who want to take a look at that, so you know exactly what questions are on there, so you can get yourself prepared once you actually go live and apply on Monday. Also, too, you'll need to fill out a verification of tax information. So IRS Form 4506T, completed and signed by the applicant. Completion of this form digitally on the grant platform will also satisfy that requirement. So we're anticipating most folks for this program will be applying online, either through the SBA's platform or through the point of sale vendors that are actually accepting applications. One thing to note, we did recently find out that, if you are a Toast, if you are a Toast or a Square customer, those are the two that I know of that are accepting applications, it may be a little bit of a faster process, a quicker process for you, simply because they already have all of your the supporting documentations that you would potentially need for this particular program. So also too, you'll need to provide gross receipts documentation. So any of the following documents demonstrating gross receipts, and if applicable, you may need eligible expenses, especially if you're utilizing calculation number 3. So you may need your business tax return, so IRS form 1120 or 1120S, your form 1040 Schedule C, 1040 Schedule F. So these types of forms, they're just going to apply based on what your organization entity how they file. And then you're also going to need bank statements. They're going to need to see your your 3 recent bank statements. Reason being, they're not looking to see how much funds you have in the account and do you really need the funds. That's not what the SBA is looking for. They want to make sure that you're providing, that we're upholding the integrity of the program and that we're making sure that we are funding the actual business that is applying for these funds. So they want to make sure that there is actual business operating activity out of the account that you're supplying. They also want to make sure that the account information that you're supplying them coincides with the applicant information. So if you're Joe's Hot Dogs Corp, but all of a sudden you have an account and you're not a sole proprietor and you have an account and it just says Joe Smith on there, that may throw off some red flags because it doesn't signify that that's any sort of business entity on the account. So just keep in mind, folks, this is a nationwide program. Unlike PPP, where we were having the assistance of all of our lending partners that could help identify their own customers and the businesses within their given community. We're doing this all through electronically. So that's why you're going to need to supply this, information so that we can do our due diligence and make sure that, we're funding the right folks. So you may also need to provide externally or internally prepared financial statements such as income statements or profit and loss statements. So again, if you have a CPA or if you have a business advisor or an accountant, connect with them to see if they can, help, get those things prepared for you if they haven't already. I'm sure if you've been applying for other grant programs and things like that, you may have a lot of this stuff, ready to go. And then point of sale reports, including your IRS form 1099K. So, reach out to your point of sale vendors. If they're not accepting the applications, a lot of them are, getting the documentation, such as the POS reports ready for their customers for this particular program. So just as far as, the specific information based on the calculation. So if your calculation 1 and 2, I'm not going to reiterate the top part, but you need the application, the tax verification. You're going to need your 2019 gross receipts. So you're going to need to provide your tax returns. And we get this question a lot. Hey, can I just provide the first page of the tax return? No, they want the whole tax return with the schedules. Okay, so they don't want just the first page. 3 months of bank statements, recent bank statements, to verify your 2020 gross receipts, it would be preferred at least one of these 2 bullets below. So either your federal tax returns that were already filed, and we know a lot of folks probably fall in the range of probably haven't filed their 2020 taxes yet, but if you have, that would be preferred for you to send that in as supporting documentation. If not, if you can get your point of sale report, that would be another preferred method. Another acceptable method, just keep in mind it may delay the review process, is externally or internally prepared financial statements, again, such as income statements or P&L statements. You want to make sure that you sign them, you date them, and you certify to their accuracy. Even if you have a CPA or an accountant or any other type of business advisor help you prepare them, make sure that it's your signature certifying to their accuracy and dated as well. And then calculation 3, again, top part is pretty much the same. You got the application itself, tax verification, 3 months of bank statements. If you're including your 2020, 2021 gross receipts, at least for one for each year. You want to, try to supply your 2020 federal tax returns filed, or 2020 federal tax returns prepared but not yet filed, if possible. Or you can supply your 2020 point of sale reports and your 2021 point of sale reports. And then for eligible expense documentation, so at least one, and required appropriate supporting documentation for specific eligible expense type. So a preferred would be a CPA comfort letter with an accompanying P&L and balance sheet documentation that will provide, the fastest SBA review. So that CPA comfort letter is basically just a verification letter from a CPA that they've reviewed, your financial statements. And then other acceptable information would be, again, similar to the first, the previous slide, externally or internally prepared financial statements, or and then you would also need to provide eligible expense documentation for any expense that you're including into your calculation. So whether that's invoices, payroll documents, so 941s, or if you have an invoice for your expanding your seating outdoors, invoices and payment records of that, things like that you'll need to utilize. If you're adding in a small business loan that you have, a recent lender statement would suffice, for that. So what, just to continue on for certain business entities, if you remember at the very beginning of the presentation, I talked about, certain entities that need to show that, at least 33% of gross receipts comprised of on-site sales to the public. So when you're looking at applicants that are brew pubs, tasting rooms, tap rooms, breweries, wineries, distilleries, or bakeries, you need to provide documentation that shows that evidence of on-site sales to the public that comprise of at least the 33% of gross receipts for 2019, which may include tax and trade bureau forms, state or local forms filed, or internally created reports from inventory management, sales reporting, or accounting software. So for businesses that opened in 2020, the applicant's original business model should have contemplated at least 33% of the gross receipts in on-site sales to the public. And then, if you're an inn, which is another eligible entity, you have to have documentation evidencing that on-site sales of food and beverage to the public comprise of at least 33% of the gross receipts for 2019. And if for 2020, again, similar to above, the applicant would have had to in their original business model contemplated their 33% gross receipts to on-site sales of food and beverage to the public. So, just keep in mind, remember, this program is for entities that overall, have the public, come in, consume food and beverage. How do you get some help applying? Again, you can call that center hotline like I discussed before. So they can help with a variety, if you just have eligibility questions, or maybe you're having issues, registering, maybe it's not working on your end, whatever the case may be, that call center can help answer some of those questions. Also too, if you have additional questions, that you can contact the SBA's district office. So, for us at the office, we can't help you with the application. We actually don't have access to the portal, so we can't sit and verify things or do the application with you. However, if you have eligibility questions or things like that, send it our way. You can reach our office at Massachusetts DO, so DO for district office, at sba.gov. And Nadine, if you want to throw that in the chat so everybody has that, you can go ahead and do that. And you can ask, questions there. We can always try to find out, different questions for you, or bring it up the chain of command if necessary. Also, too, help is available in multiple languages, both, I think, on the center hotline, and I know right now on the Restaurant Revitalization Fund landing page on SBA.gov, if you just scroll down to the bottom of the page, I think there's about 25 or 26 different languages listed there right now. Just click on the language that you feel most comfortable with, and it should convert everything over to that language. So all the information on that page and the documentation that supports it and things like that all should get converted over. You know, I did a test with a few, and it seemed to work out, you know, pretty good. So just a reminder of some best practices. So you want to provide complete documentation. You want to make sure applications with incomplete documents will be rejected. So make sure that, you know, everything's complete, ready to go for Monday. The review process will restart when the complete documentation is provided. So you don't want to, you know, jeopardize, you know, getting an award just because you didn't have one piece of documentation. So really be prepared come Monday. You know, spend this weekend, spend some extra hours. You know, I know everybody, you know, on the line here works really hard, but you know, these are important dollars for you folks to get. So, you know, put in that extra work this weekend to make sure everything's squared away. Then leverage your resources. While not required, the use of CPAs and other accounting professionals may help ensure a complete and well-documented application. Application corrections. So SBA is not able to make corrections on behalf of applicants. Okay, so applicants who require corrections will need to contact that center hotline phone number. Then applicants who still intend to apply for PPP, again, you know, if you have an open application, you're going to have to decide within the next basically 24 hours, you know, if you want to keep that PPP application going or not, because the RRF application, like a period, starts Monday at noon. So, you know, if you've already gotten an approval, but maybe you haven't gotten your PPP loan dispersed to you, that's fine. Just contact your bank, ask them what the approval amount was, so you have that amount ready, because, you know, I think you may need to supply that on the application, or you'll definitely need it when you're trying to do your calculation. So, you know, as long as it's approved in our core systems, then it's fine. But if it's still pending, they haven't actually inputted the PPP application yet into the SBA's Paycheck Protection Program portal, then I would call them right away and see if they can just hold off on that. So also additionally, when it comes to applying, there's going to be a pilot period. So the pilot period participants will be randomly selected from existing PPP borrowers who self-identified as members of the RRF priority groups. Pilot participants will not receive funds until the RRF is open to the public at application launch. So from what I understand, they've already been doing this. So they selected about 1,000 entities nationwide to kind of work out some of the kinks before they open it up to everybody on Monday. So then there's going to be a priority period. So the first 21 days, so during this initial 21 days, the SBA will accept applications from all eligible applicants. Only applications from small businesses owned by women, veterans, and socially and economically disadvantaged applicants will be funded during this period. Okay, so I want to stress that regardless of your situation, whether you're considered within that certain priority group or not, apply right away. You know, don't wait the 21 days to apply. So that, you know, but like I said, you know, as you can see here, they are going to look at applications from these businesses that are owned by women, veterans, and socially and economically disadvantaged applicants first. And then on day 22, all eligible applications will be processed and funded until the program funds are exhausted. So what are priority groups? So one thing to know, like we have this on the slides here, and you know, we don't have the full definitions on the slides because it is, you know, fairly long. However, when I send everybody the links for like the FAQs and things like that, there is a link that goes over, like, say, socially and economically disadvantaged in length, and it also provides you links to the Code of Federal Regulations that completely defines both of those as well. So if you need further information on that, I highly suggest, you know, utilizing the FAQs and going to those links, because it does get, you know, fairly long. So a small business concern that is at least 51% owned, and the management and daily business operations of the applicant are controlled by one or more individuals who are women, veterans, socially and economically disadvantaged. Applicants must self-certify on the application that they meet eligibility requirements. So this isn't similar to, you know, Nadine would have background on this when it comes to different government contracting programs. You know, there's an actual process, certification process, depending on what program you're going for, you know, you fall under. With this, it's just self-certifying through the application process. So we're trying to make sure, we want to stress everybody to have the utmost integrity when it comes to, you know, applying for this. You know, there's no one that's officially, you know, checking, or you need to provide supporting documentations at application to support that you're, you know, within one of these priority groups. You know, however, keep in mind, SBA does reserve the right to review any application at any point in time. They could review your application if you got funding a year or two from now and do an audit, and they may ask for supporting documentation. So another thing to keep in mind is, you know, this is taxpayer money, right? So the information for who got the funds for this program is provided to the general public, right? So we don't want, you know, you don't want as a business to ever be caught in a situation where, you know, people in your community find out that you may have not told the truth on an application. So we want to make sure folks are completely aware, you know, that, you know, even though we're just requiring self-certifications, you know, just, you know, everybody holds integrity to the, you know, highest of importance. So just as an example, though, as far as how you can get to that 51%, because, you know, just because you may have multiple owners, you don't need to have just one owner as 51% that falls into this category. You can have multiple owners that add up to the at least 51%. So as an example here, you may have an applicant that has 5 owners who each own 20% of the applicant. You have 2 owners who are veterans. 1 owner is socially and economically disadvantaged individual. So SBA will consider this applicant to meet the requirement that at least 51% of the applicant is owned by a priority group. So, you know, just keep that in mind. You know, there's a lot of situations where multiple folks own a entity together. So you don't have to, you can combine, you know, things if that falls within your case. So socially disadvantaged individuals are those who have been subjected to racial or ethnic prejudice or cultural bias because of their identity as a member of a group without regard to their individual qualities. So individuals who are members of the following groups are presumed to be socially disadvantaged. Black Americans, Hispanic Americans, Native Americans, including Alaskan Natives and Native Hawaiians, Asian Pacific Americans, or subcontinent Asian Americans. Again, when it comes to economically disadvantaged individuals, those are those who are socially disadvantaged individuals whose ability to compete in the free enterprise system has been impaired due to diminished capital and credit opportunities as compared to others in the same business area who are not socially disadvantaged. So you may find yourself in a situation where all of this applies to you, or none of it applies to you. But like I said, you can combine, you know, for owners that have, you know, multiple owners with different percentage of ownerships, you can combine that to get to the 51% threshold. Entity reorganization for purposes of qualification for a priority period will result in automatic disqualification of the award. Again, we want to uphold the integrity of this program. You know, the SBA does not want to see anybody just reorganizing their entity for the simple fact of getting themselves in a priority group. And I'm sure most folks aren't going to look to, you know, do stuff like that. So when it comes to funding, there's some set-asides for this program. So there's $5 billion is going to be set aside for applicants with 2019 gross receipts of not more than 500,000. Okay, and then an additional $4 billion is set aside for applicants with 2019 gross receipts from 500,000 to 1.5 million. And then an additional 500 million is set aside for applicants with 2019 gross receipts of not more than 50,000. So like I said, you know, the SBA is really trying to help, you know, the entities that were hit the hardest, the entities that are truly small small businesses in the eyes of the general public, right? So, with this program. So hopefully, with that said, a lot of people can get funding, through this program. All right, so we are at the tail end. I know that was a mouthful, and I know I probably, everybody's head is spinning at this point because of all the information I gave out, but, we can open it up to Q&As if we want to do that. Let me just take my screen off here.
Dan,
Yes.
I'd like to know if I can go to the chat and read these questions for you.
Sure thing. Sure thing.
Thank you. Thank you so very much. Okay. Salima says, I purchased my cafe from the previous owner in August of 2020. It was in operation for 5 years. Prior to that, am I able to use the previous operator's 2019 gross receipts minus my 2020 gross receipts minus PPP loan?
That would depend. I'd have to get some clarification on that. I think that would depend. Did you change the business structure at all? Did the EIN change over the course of that period? Because typically, a lot of times when you change ownership, you may change, sometimes you may change the business structure, sometimes you may change the tax ID, things like that. So that's something I'd probably have to bring to the RRF team and see what they say on that. I'm not 100% sure.
When I saw that question, I thought that your slide number 18 that was talking about the time frame of being in business, that perhaps that when she started that business, that's when she's going to have to use the revenue.
Yeah, so it's not that you're not eligible. It's just, could you use calculation 1 versus say like calculation 2 or 3? So yeah, I'm not eligible is really not the concern. Is it's more of what calculation do you have to use?
Exactly.
It says that the EIN changed, and she said it's the EIN that changed.
Yeah, the EIN that changed. So I would think that you would have to. When did she buy the business again? I'm sorry, I forgot that. August 2020. Yeah, so I would say that that you would have to utilize calculation 3 in that sense, because you're utilizing taxes from technically another entity, because it's got a different tax ID. So I don't think they would accept that. But you know what, before I give you a solid yes or no, let me find that out. If you could, Mark, if you could get her email so we could follow up with her later today, or hopefully by Monday morning. I'll try to get an answer.
Go to the next question. Please elaborate on the possibility of applicants who are not yet in operation to receive funding.
Yeah, so let's say you haven't started your operations yet, but you've incurred those eligible expenses, over the last maybe 6 months or so. You can actually utilize that calculation 3 and add those eligible expenses. So any of those expenses that I talked about in the presentation, those are considered eligible expenses for that particular calculation. And then, minus out any sort of gross receipts you may have had or PPP. Now, in this case, you wouldn't have had, if you haven't started yet, you wouldn't have had. So it would just be, seeing if you can get funding for your eligible expenses. But yeah, you would be able to utilize, calculation 3 in that sense.
Thank you, Dan. Sorry, can you give me the supported browsers to use again?
Oh yeah, sorry about that. Yeah, let me hold on one second. Let me just minimize the screen. Now the laptops, it's hard, it's like trying to get in and out of screens here.
I think you said we were not supported by Internet Explorer. Is that correct?
So we got so on the Q&A section, it says what browsers are supported. So modern versions of Chrome, Firefox, Safari, and Chrome-based Edge are supported. Internet Explorer and legacy versions of Edge are not supported. So if you have Edge, try to make sure you have the most up-to-date version of Microsoft Edge.
Okay, I'm checking. Let's see. Do ADA categories fall into the priority group?
Do
The
what?
American Disabilities Act, that's what ADA is.
I'd have to look. I'd have to look at the full definition. I don't know. It may define them in there, but yeah, like I said, the FAQs, we'll make sure we send that out to you. And the FAQ does provide a link to the code of federal regulations that breaks down all of the eligibility in full detail. We just can't, I mean, we would have like 6 slides on that if that was the case, but yeah, I don't have it all up top here. So I would have to, yeah, look that specific up, but you know, we'll send you the links for that.
We also have our Massachusetts DO at SBA.gov in the queue, in the chat here. Dan, thank you for mentioning FAQs because I've heard you talk about the hotline, the 800 number and the hotline, and that someone may be on hold for quite some time. And going through the FAQs while you are on hold might get your questions answered. So, or looking at the SBA website at sba.gov/restaurants.
Yeah, and they're updating those FAQs hourly. I mean, I know 2 days ago I checked in for eligibility type questions. There was, I think, like 60. Now there's over 100 on there within the last 48 hours. So, you know, what they're doing too is they're taking common questions that are asked through the hotline. We're also internally able to have an office hours with the teams the team at the SBA that's running the program and asking, you know, a lot of questions that we're receiving at the district office level, and they're collecting all of those and updating them on the FAQ section.
Okay, our next question here. I have applied for the second PPP loan and the loan application was not approved. I have not received the decline letter from the lender. Can I apply for the Restaurant Revitalization Fund? SBA will know my loan application was declined.
Yeah, the system, yeah, if you didn't get approved for whatever reason, the system's gonna not recognize that you got funds for that. So that's why when you're putting in your EIN, from what I recently found out is once you put in your EIN, it should upload whatever PPP funds you did receive. But yeah, if your application was denied, you obviously didn't receive those funds, so it shouldn't upload any funding on that end.
Okay. I am not seeing any other questions right now in the chat. Mark, you wanting to open this up to the public for questions?
Yes, I'll do that. All right, everyone that is currently here. I have allowed you guys to ask questions directly to Danielle Martiniello, who is the Lender Relations Specialist at the Small Business Administration, and Nadine Boone, which is the Assistant District Director for Business Development at the Small Business Administration. Just be mindful to keep your audio off if you are not going to be asking any questions, and ask away. And I'm going to open it up. If you do not have any questions, then we could conclude the webinar. So please ask away. All right. Is credit score going to be one of the determining factors for this fund?
As far as I know, this fund is not being credit scored. There's nothing within the guidance that says it's being credit scored or that's part of the process, you know, at all. You know, yeah, I'll double check, but yeah, I don't think credit score is a factor in this whatsoever.
Okay. All right.
Yeah, it's more just like bankruptcy type issues will be, you know, factored in, or if you're just not eligible based on, you know, an ineligible entity type. But yeah, credit score, pretty sure is not factored in.
Okay. All right. So this is the end of the webinar. We do not have any more questions, and I would like to thank you, Danielle and Nadine, for being here today, for always taking out the time to be at the front line to give us first information to dispel misinformation about the SBA and the availability of funds and the funds that are currently
Yeah,
out.
we don't bite over here. Maybe Nadine a little bit, but I don't bite.
There's a lot of bad information out there. People never have the opportunity to connect directly to get the information right from the source. So the community is very grateful for that and for the work that you guys do consistently, repetitively, and we are very grateful for that. This is the last opportunity for you guys to ask questions. If you do not have any questions, we would like to thank you once more. We'd like to thank you, the U.S. Haitian Chamber of Commerce, for enabling this interaction to take place. We would like to thank hence Patrick Domerson. He's not here today, but we'd like to thank him for setting that up as well. And we'd like to thank you business owners that are currently in the process of trying to find the light at the end of the tunnel. We hope that this information has been instrumental in helping you keeping your business going, and we look forward to helping you and providing you with more information in the future. Be good to yourself, be safe, and have a good day.
Thank you. All right, everybody enjoy their weekend. Keep forgetting it's Friday.
Dan, is there any additional links or anything that you're putting in the chat?
So I'm gonna, Mark, I'll make sure you guys get all the important links so that you want to disperse that to all the folks that joined in or any other chamber member, so that they'll have that. But I'll do that within the next 30 minutes or so.
Awesome, awesome, awesome.
Right.
And we will make this video available for those that have not been able to watch it on our platform. So this way they could inform themselves or revise will the name of on the PPO loan is different on the IFR is okay. I don't know if that's a question. We have one last question.
What was it again?
Will the name on the PPO loan, maybe that meant PPP is different to RFK is okay.
Well, I mean, you want to probably have it the same. I'm not really sure why it would be different if it's the same entity. I guess I'll probably need a little bit more context. You know, send that to the Massachusetts DO for district office at sba.gov. Just provide a little bit more background on that, because if you have the same entity, it should be, you know, the name. I don't foresee why the name would be changing.
Okay. All right. Well, thank you very much, and you have an awesome weekend.
All right, you too.
Bye for now.
Bye.
Thank you, Dan. Thank you, Mark.
Welcome.
Thank you.
Of course.